Buffett is not buying, and that's your biggest warning right now. Stock markets dropped substantially since the beginning of the year, and this week we were very down, then up sharply, then ended a bit down overall, all stemming from this Iran war and oil crisis situation, but also a couple of other very important factors. I'll go over all that, and then also the rate cut expectations and volatility in the stock market, and where it's probably going to go. If you're wondering if you should be dumping all of your money in right now, or worried that we missed the boat because you saw a little bit of an uptick, especially in the middle of this week, and maybe that's a sign of things to come, and maybe we've already hit the bottom. Let's see what Warren Buffett has to say about this.
You're still making new purchases?
Got one tiny purchase, but we aren't finding things that...
Well, let's talk about that. The market has come down substantially.
Not substantially.
Well, you've got both the Dow and the Nasdaq in correction territory. It's the worst performance on a quarterly basis for stocks in about 4 years. Do things look cheaper to you?
No. 3 times since I've taken over Berkshire, it's gone down more than 50%. I mean, if you look at the markets of, the worst probably was the 2007-8 period, although there was that one Monday when you had 21% in a day. I mean, this is nothing. I mean,
well, this is nothing to make you get excited and think there's huge valuation drops.
If they're 5 or 6% cheaper, that doesn't, we aren't in it to make 5 or 6%. I mean,
this is pure wisdom from somebody who's been there and done that. One of the best to ever do it. But people still think that they can outsmart it. Year to date, the S&P 500 is down. Year to date, the Nasdaq 100 is down. Yes, these are dips, but not substantial enough to clear out the bank accounts and rush to drop everything into the market. Warren Buffett said it best. He's not in it to make 5% or 6%, and he's banking on things getting worse. Buffett's showing signs that he believes that things are going to get much worse. And it doesn't even have to do only with this oil crisis. And remember that all investing carries risk, so do your own research. This is not financial advice, and I'm not a financial advisor. Berkshire held more than $373 billion in cash and treasury bills at the end of 2025, and Buffett confirmed. The company bought another $17 billion in T-bills at the auction this week. While having so much ready cash might make others itchy to make a move, Buffett said that the pile isn't going anywhere until he sees a real opportunity. If there's a big decline in the market, and Buffett said, we will deploy. Now, Berkshire Hathaway has absolutely crushed the S&P 500 over the past 50 years. Look here, this is just the past 20 years, and it's outperformed big time. The reason for this is the method that Warren Buffett uses, where he's extremely patient and he doesn't just force the buy. Let me explain a little more on that, and then I'm going to explain exactly what to invest in and how during this crazy year of 2026. But first, I want to say thank you to Snowball Analytics for sponsoring this video. This dashboard has everything in one place, telling you your value, profit, return, and most importantly, your passive income through dividends. You can check the portfolio diversification easily here. And my favorite feature on the dashboard is the dividend tab. It's where you can easily see all your insights, which asset is paying and how much, and exactly when. So you can easily forecast and stay on track. You can check on the dividends coming up because they have a great dividend payout calendar. And now this new X-ray feature has been helping so many of my clients. This lets you know how much of an actual company you have exposure to. Like here, if you have VU and GPY as top holdings and want to know which companies you actually hold the most, you click the X-ray funds tab, and now it tells you which individual holdings are heaviest in your portfolio. Another awesome feature on Snowball Analytics is the community tab, where you can stay up to date with awesome blogs and even public portfolios. So now, going back to what I was saying before, you just saw how much cash Berkshire Hathaway has sitting on the sidelines. Of course, he wants to get it deployed because that's going to work way harder there than sitting in treasury bills. But he said it's not time yet. It's not low enough yet. He's worried much more about things in the midterm or even long term, not just what's happening right now in the very short term. Buffett said he's worried less about a recession than about the dollar's status as the world's reserve currency. The stability of the banking system, he said, matters far more than any single market move, recalling 2007, 2008, when even the largest firms stopped answering phones. So now, speaking of the short term for a second, the biggest driver of market moves right now has to do with what's going on in the Middle East, and specifically the oil crisis. Tensions involving Iran and shipping through the Strait of Hormuz are driving oil sharply higher. Oil has been up over $100. Now, the short-term market impact is that energy stocks will go up, but tech and growth are definitely going down, and we're seeing that. Obviously, there's a lot of volatility right now. The market is just super fragile, and bad news hits way harder than any good news. People are on edge, and they can't even trust what they're seeing announced in the media. Either way, right now, the worst way that you could be investing is by making investments based on any news story. Anything in the very short term, first of all, may not even be true, so you want to fact check that. But also, things are getting switched so quickly. So what I want you to do is stick to a plan and be consistent. Make sure that you have a full emergency fund. Make sure you're paying off your debts and you're not adding to any debts at this point. Right now, it's a lot better for you to play it just a little bit safe and make sure that you and your family are set up well during this crazy time. Buffett's been right a lot, and his comments about being worried about something much bigger are definitely something to heavily consider. Now, let's talk about rate cuts, because rate cut expectations just keep getting pushed back. The Federal Reserve is now less likely to cut anytime soon. Oil-driven inflation is complicating that policy. The higher for longer narrative is strengthening again. Now, in the short term, we're going to see pressure on valuations, especially in tech. Bond yields will be creeping up, and it limits the upside of these rallies. Markets were pricing in all of these rate cuts that were supposed to happen. And now, since that's actually not supposed to happen anymore, a lot of volatility is going on. And that's why the market is dropping, at least in the short term. And the market doesn't just care about rates. It cares more about expectations. And right now, expectations are moving in the wrong direction. Looking at the bull case, possibly inflation could cool, and then the Fed would cut rates. And then stocks would rally. More likely, though, is the bear case. Oil stays high, inflation rises, the Fed stays tight, and stocks struggle. That's why markets feel uncertain and choppy right now. Now, we can't do anything about what's going on in the markets or how markets are reacting. But what we can do is control how we react to our own investments and personal finances. Here's Buffett's best advice that he's been saying for the past 60 years or so, and very few people are listening to this. But I agree with this wholeheartedly. He described a central tension between the stability of the US economy and the human desire to gamble. You have this incredible cathedral called the American economic system, but attached to it is a casino, and people are going to walk back and forth between the two. If investors just buy stocks and sit for 50 years, if they have a group of them, between the two. If investors just buy stocks and sit for 50 years, if they have a group of them, basically an ETF, they're going to do just fine. He said the American capitalist system works, and betting against the house does not. Buy and hold solid, broad ETFs with low fees. Stay consistent in investing, rain or shine. To see exactly what to invest in, watch this video here, or to see my last 20 years worth. Of financial knowledge compiled into one video, this one will be well worth your time. If you found this video valuable, please hit the like button and subscribe to my channel. Don't forget to write your suggestions on the comment below.